Welcome to Books in Sum, your go-to for bite-sized book summaries.
The New Trading for a Living by Dr. Alexander Elder. Dr. Alexander Elder's book, The New Trading for a Living, lays out the groundwork for a successful trading career for newcomers. He says that learning to read a graph and familiarizing oneself with bulls and bears is the first step to making money in the market. It is important for traders to compare the services and commissions offered by various brokers and banks to ensure they are not paying more than necessary. Another typical trap is slippage, which occurs when the cost to fulfill an order is less than the amount the customer actually pays. It is important for traders to compare the services and commissions offered by various brokers and banks to ensure they are not paying more than necessary. The two order types, limit orders and market orders, are the focus of this book. The difference between a market order and a limit order is that the latter ensures the new trader doesn't pay more than a predetermined price for a stock. No good trader ever takes chances, and when they do, it's because they have no emotional investment in the stock in question. One of the author's friends recently fell victim to self-sabotage, demonstrating yet another common trap for traders. As a result of his absence, a large position with no guarantees was left open while he traveled through Asia. Trading requires a high degree of personal accountability for both gains and losses. Trading success requires standing apart from the herd of trend followers that constitutes the market at large. Knowing the most common types of group trading behavior, such as bulls and bears, can help you avoid trading with the herd. Because it allows one to spot and capitalize on recurring price patterns, chart analysis is a useful tool for studying crowd behavior. By way of illustration, bulls are in the driver's seat and feeling bullish as prices rise, while bears are in the driver's seat and feeling bearish as prices fall. You need tools for analyzing crowd behavior in greater detail to determine whether a bull or a bear market is currently in effect. Mastering bar graph fundamentals will equip you to make informed decisions. The 5 elements of a bar chart: opening prices, closing prices, highs, lows, and the distances between the highs and lows, are the most crucial data in this text. In general, opening prices reveal the opinion of novice investors about the value, while closing prices reveal the decisions of experienced traders. For each bar, the high represents the strongest support from buyers, while the low represents the strongest resistance from sellers. Indicative of the ferocity of the battle between bulls and bears is the size of the range between the extremes of price action. Successful chart analysis requires a knowledge of support and resistance levels. A support level can be identified by drawing a horizontal line connecting two or more lows on the chart. The market has a support level because consumers have memories. The text focuses on the two most crucial aspects of stock trading: liquidity and volatility. Both liquidity and volatility are measured by the average daily volume of shares traded. The two primary rules discussed here to reduce exposure to loss when trading stocks are the most crucial aspects of this material. The 2% rule states that you must not risk more than 2% of your trading equity on any given trade. Second, if your monthly losses plus the risk of open trades equals 6% of your trading capital, you must close all of your open trades and wait until the next month to open any new ones. Avoid this situation at all costs by investing solely in shares of stock that see daily volume of at least 1 million transactions. More opportunities to make money and lose money come along with greater volatility, which is the average short-term movement in the stock price. A stock's volatility can be measured relative to its benchmark via a comparison of their betas. Trading novices should prioritize assets with low betas because doing so reduces their risk of loss. There are 2 simple rules that traders should follow to reduce their exposure to risk: the 2% rule, which states that no trader should risk more than 2% of their trading equity, and the 6% rule, which states that no trader should risk more than 6% of their trading equity. It entails tallying up the losses so far this month, as well as the risks on active trades, and then adding these two figures together. If the amount is equivalent to 6% of your trading capital, you should wait until the end of the month to initiate any new trades. You should keep a trade journal to help you stay on track with your trading. Keeping a journal can help you curb irrational trading decisions, anticipate sales opportunities, and better prepare for the future. It's possible to locate a pre-made, suitable template on the web. The key information in this book is the process for developing into a profitable value investor. Some examples are keeping a journal and looking for your personal equity curve, doing some research before diving in, reading The Education of a Value Investor by Guy Spier, and so on. Spier shares his story of how he went from a greedy Wall Street hedge fund manager to a successful value investor, and he offers some surprising insights into the false choice between living an ethical life and being financially successful. In addition, he identifies the people who have had the greatest impact on his professional development and describes how that person shaped his outlook or approach to work.
We hope you found this summary helpful in your listening journey. If you're interested in diving deeper into the topic or getting your hands on the whole book, be sure to check the description below where we've included links to the book and other related products that may be useful to you. Don't forget to hit the subscribe button to stay updated on our latest book summaries. And feel free to leave a comment with any suggestions or requests for books you'd like us to cover. Thanks again for tuning in and happy listening.